Mediobanca, one of Italy's biggest and most important banks, just dropped their full year 2025 earnings. Now, the CEO is out there saying it's the best year in their history, but the market's reaction told a completely different story. So let's break it down and figure out what's really going on here.
So CEO Alberto Nagel, he kicks off the call with a ton of confidence. He frames the whole year as a historic high point for the bank, backed by some really strong commercial wins. It's a bold statement for sure, and it definitely sets some high expectations.
But here's the puzzle, right? Despite that victory lap from the CEO and what were on paper record results, the market's reaction on the day was, well, it was a big nothing. The stock actually closed down a bit. So what did investors see that the CEO's headline quote completely missed?
To solve this little puzzle, we have to dig deeper than just that big quote. We got to look at the actual performance versus what the analysts on the street were expecting.
And on the surface, everything looks really solid. As you can see, they just squeaked past analyst expectations on all the key metrics: earnings per share, revenue, and net profit. By all accounts, a pretty solid quarter. But trust me, these little beats, they aren't the real story.
No, the number that's absolutely crucial here isn't those tiny beats. The real story is this number, a massive 14.2% jump in fee income that has now crossed the €1 billion mark. And folks, this isn't just another line item on a spreadsheet. It is the engine driving their entire strategy forward.
And this brings us right to the bank's big pivot. See, this incredible fee growth isn't just happening by accident. Not at all. It's the result of a very deliberate, multi-year shift into what they call a capital-light model.
And this chart just shows the strategy perfectly. I mean, look at that contrast. While income from their traditional lending business was basically flat, it's a tough environment out there. Their fee income just exploded. It's a crystal clear sign of their pivot away from being so dependent on what interest rates are doing. So where is all this growth coming from? Well, it's a really powerful combination. Their wealth management fees shot up 13%, and that was driven by a huge €11 billion in net new money. But get this, their corporate and investment banking fees were even stronger, up 20%, thanks in large part to the super successful integration of the tech advisory firm Arma Partners.
Okay, so just so we're all on the same page, what is this capital-light model? Well, think of it this way. It's all about efficiency. Instead of using your own money, your balance sheet, to make loans, which forces you to hold a lot of capital just in case those loans go bad, you focus on services that generate fees. It's just a much, much more efficient way to grow your return on equity.
Now, this whole capital-light strategies isn't just happening on a spreadsheet. Oh no, it is playing out right now in a very high-stakes corporate showdown. It's like a game of chess for control of another major player.
So here's the deal. Mediobanca is trying to buy the private bank Banca Generali to basically supercharge its wealth management business. But there's a huge problem. A rival bank, Monte dei Paschi, or MPS, has launched a hostile takeover offer for Generali. This is forcing Mediobanca to speed up its own plans in a huge defensive power play. And the timeline here is incredibly tight. We're talking Mediobanca pushing for an August 21st shareholder vote on this deal, but that all depends on getting regulatory clearance around August 18th and getting some crucial feedback from Generali's parent company by August 6th. The clock is absolutely ticking on this one. Which really begs the question, right? Is this whole move on Banca Generali just a defensive shield to block their rival, MPS? Or is it an offensive sword, a strategic masterstroke to permanently transform Mediobanca into a fee-generating powerhouse? Okay, so with that really complex background, let's put on our analyst hat. How should we be looking at this whole situation? Let's walk through a potential investment thesis based on everything that's happening.
So here at Talk Tickers, our call on this would be an outperform rating.
And the thesis is actually pretty straightforward. We think the market is getting completely fixated on the short-term noise, and it's seriously underpricing the power of this fee growth engine. If they pull off this Banca Generali deal, it would provide incredible strategic clarity, locking in that capital-light model for years to come. So how could you actually trade on this thesis? Well, one idea is what's called a pairs trade. You'd go long on Mediobanca, while at the same time shorting a broader Italian bank ETF. The whole idea here is that Mediobanca is actively separating itself from the interest rate headaches that plague all the other traditional Italian banks. Their fee engine is built for any weather, while the rest of the sector is facing some serious headwinds from falling rates. And this chart really just drives that logic home. Take a look. Over the last year, Mediobanca has outperformed the broader Italian market, but it's actually lagged the red-hot banking sector.
A pairs trade like the one we just talked about is basically a bet that this performance gap is going to close, as Mediobanca's unique story finally gets the rating it deserves.
So the puzzle of Mediobanca, when you boil it all down, it really comes down to one single question.
Is the market right to be cautious, focusing in on all the risks of a complex corporate battle, or is it missing the much bigger picture, this powerful strategic shift to a more resilient business model that's already delivering record results? That is the billion-euro question that investors are going to be watching. And of course, please remember this is not financial advice.